On today's hot sheet, I'm discussing existing and pending home sales and answering your questions live. This is a free format Friday, September 22nd, 2023. I am Byron Lazine, and the hot sheet starts now. Here we go. Free format Friday, which means I answer your questions live. The call number is 203 548 0417. 203 548 0417. That number is scrolling on the bottom of the screen. Happy to take your calls. The call lines are open, as they say. Before we do that, let's jump into NAR's existing home sale data just released yesterday. We also have pending home sale data that was just released this morning from Redfin. Starting with the existing home sale data, home sales retreated 0.7% in the month of August. It's a seasonally adjusted annual rate now of 4.04 million. So we're still above 4 million seasonally adjusted annual rate of sales, existing home sales, that is, but getting very close to going under. Remember, Zillow says the closer we get to 8% interest rates, the closer we're going to be to a 3.3 million seasonally adjusted existing home sale run. Sales dropped 15.3% from 1 year ago. The median existing home sale price jumped 3.9% from 1 year ago to $407,100, according to NAR. The third consecutive month, the median sale price surpassed $400,000. Of course, this data is lagging because it is the closed deals that were put together 60 or even 90 days ago in some instances. The inventory of unsold existing home sales dipped 0.9% from the prior month to 1.1 million at the end of August. Okay, so we've got a whole bunch of data here today in the daily download on BAMX. So BAMX members will have access to all of that. All you got to do, if you're not a BAMX member, is use code HOT to get 10% off of BAMX. I'll show you one of those graphics here in just a second once the computer starts to cooperate with me. Bobby, I think we've got to get the dongle. Bobby calls it a dongle. I don't know if that's a technical term, but the dongle here for the iPad changed out because this one is giving me fits. August 2023, and there's an NAR table to basically show here what's going on. 0.7% nationally month over month, down 15.3% year over year. Inventory nationally is now up yet again, 3.3 months off of the 3.2. This can be a good sign for buyers who are thinking about, will I have an affordable price in the winter? Will prices come down? Maybe not affordable for them, but will prices come down in the winter? More time on market, more inventory accumulating on the market is going to help in those situations. Of course, 6 months on market would be a neutral market. I made the case on Twitter X, retweeted Lance Lambert from Fortune, where he had a basically put out something about months of inventory. I quote tweeted that and said, hey, I've been in a buyer's market where you have over 6 months of inventory. I've been in a seller's market where you have less than 6 months of inventory. I've been in a neutral market where it's right about 6 months of inventory. This right here is a builder's market. Okay. If you're just in a seller of an existing home sales, you might not get quite the seller's market you had the last couple of years. It's still, yes, a seller's market, but you might not get quite that competition because of how unaffordable it is. But if you're a builder and you're able to now negotiate or, mark down the interest rate for the buyer, you're in a power position here, kind of dictating the inventory in whatever market that may be. Let's take a look at the regional breakdown on these numbers. Love to know in the comments where the months of inventory are for you, and really existing home sales, what you're seeing right now in your market. Regional breakdown according again to NAR, with an annual rate of 480,000 in August. Existing home sales in the Northeast were unchanged from July, but down 22.6% from August 2022. The median price in the Northeast was 465,700. That's up 5.8% from a year ago. So the Northeast prices continuing to scream, and existing home sales down bigger than the national number. In the Midwest, existing home sales increased by 1% from the previous month to an annual rate of 970,000 in August. It's down 16.4% from the previous year. The median price in the Midwest was 305,300, up 6.8% from August 2022. How about the South? Faded 1.1% from July to an annual rate of 1.84 million in August. So almost half of our annual sale rate is coming from the South. It's a decrease of 12.4% from a year ago. The median price in the South was 366, up 3.2% from August 22. In the West, existing home sales slumped 2.6% from the previous month to an annual rate of 750,000 in August, down 15.7% from the prior year. The median price in the West was 609,300, up 1%. So home prices are all up. It'd be hard pressed to see that continuing in a winter when you typically will have prices start to decline as you get closer to the very end of the year. But that's where we're at right now. Super lagging data on prices and pretty up to date data on the on where we're at on sales dropping. Curious to know if you would expect them to continue to drop at this rate. Okay, moving over to pending sales. So there's our lagging data with the closed sales. Let's take a look at pending sales just released this morning from Redfin News. Housing market update. Pending home sales dropped 13% year over year as mortgage rates are obviously stubbornly high. Yesterday, by the way, we hit 7.47. I think on the hot sheet yesterday, I predicted that we would get to about 7.5. We'd have pretty significant jump up on Mortgage News Daily's survey, and we did. We went from 7.33 to end the day on Wednesday to 7.47 yesterday. Now we've hit two higher marks in previous days this year, 7.48 and 7.49. So yeah, the rate is stubbornly high. Redfin, there's no question about it. And I think we've got to expect this to be the case for longer, unfortunately. Check out this tweet, and I'll put the chart into the daily download for BAMX members. Overnight, a milestone was reached. 10-year U.S. government yields hit their longest term yield since 1790. Their long-term average yield, long-term average yield, we hit it last night at 4.5%. It's the first time since 2007, as you see there on the bottom right of the chart. Move that up. First time that we've hit 4.5 on the 10-year was last night. If this sticks here throughout the day, and I'll show you where we're at right now in real time, if this sticks throughout the day, which we're down just a bit off of that, thankfully, you will see a 30-year, and you may just see a 30-year anyways, go up over 7.5 here today. All right. So Redfin right on the money with the stubbornly high. But what's the data tell us on pending home sales besides being down 13% year over year? Okay. Let's take a look at, here we go. Let's go down. They've got some great data here. And I'm going to drop a bunch of this into the daily download. Here we go. Median sale price year over year up 3.4%. Nationally, this is according to Redfin's data. So prices are setting records or near records in almost every market. I know there's some of your markets that may not be the case, but that would be an outlier versus the rest of the country. Median asking price up 4.5% year over year. Sellers asking for more. That time could be running short for how much they can push it. Home buyer housing payments. Look at this. This is where we have the most unaffordable housing market ever. Mortgage payment during the 4-week rolling average is $2,661 And again, that's at a 7.2%. Today, we're going to be at 7.5%. So it's getting more unaffordable there really by the day. Pending sales down 13% year over year. New listings of home down 7% year over year. We did see a good week last week on new listings, as well as inventory. So when we come back on Monday for the hot sheet, I'm hopeful that those numbers will be good because inventory can start to chip away at what we're experiencing here with the affordability for buyers. Active listings of homes for sale down 16% year over year, the lowest on record. 3.1 months of supply. Again, NAR's data yesterday says 3.3. So we're in that range. Love to know in the comments, are you over 3 months or under 3 months in your market? The Northeast still is under 3 months, but starting to finally creep up a little bit in some areas. 38% of pending sales under contract within 2 weeks. Is that still the case for you? Or are you seeing some properties go outside of 2 weeks? Again, you can call in and chat about any of this at 203-548-0417. If you've got any questions, maybe you went to BAM camp, you got a follow-up question from that, 203-548-0417. Don says pending in North Texas is down 21.7. So way off of the national mark there of 13%. Homes sold in a median of 30 days. You can see we're at 30 days now, and that is in line with where we were in 2022 and still well below. Look at that. 2020 at this time, the median was up closer to, on a 4-week rolling, was closer to 40 days. Of course, 2021, we were under this number. Homes are still selling very quickly, and that's not necessarily the historic norm. 32% of homes sold above final list price. Are you seeing more or less of this? Love to know if you're still getting over list price, over ask. 6.4% of listings had price drops. Okay, you're starting to see price drops on the rise. Look at the orange line there for 2023, and it has been on a increase here pretty much steadily since March in the upward direction on price drops. Hearing and seeing more of those across the country. Average home sold for 99.5% of the list price. That's on the decline right now, not as sharply as last year when the rates really shocked the market. And you do typically get a seasonal decline. Remember, 2020 was the outlier year where you didn't really get that seasonal decline on getting percent of list price. But going back, this would be the case in almost every fourth quarter where you see a decline there. So nothing alarming about that. A lot to do with historical norms. Redfin homebuyer demand index down 11% year over year. Okay, so there you go on Redfin's new data just released this morning on where we're at. Big news, obviously, is the pending home sales have dropped 13%. And I would continue to see that as a likely scenario here moving forward. OKC average days on market is 32, which is the same as July for Jody in OKC. I think this is the big one here that we're going to want to pay attention to. This chart that I showed you just a few moments ago, this 10-year U.S. government yield back to the average for the first time since 2007, that average being 4.5%. That's the average since 1790. When you break 4.5, which we've done on, 1, 2, it's like 3, 4 major occasions over time, all but one of them, you kind of sit there for, an extended period of time, all but this one. And, you're still above it for, years. That's not like days right there. There's still years involved there. Obviously here in a very much an extended period of time. So we break 4.5 and, there's not any instance in history since 1790 where you touch 4.5 and really don't get up over it for the foreseeable future. Okay. And here's the deal with this. Average day on market, Charlotte 34 from Brooke, I believe. So, or Brock. I'm sorry, Brock. My apologies there, brother. So the expectation is that we're just going to be above this 4.5. The only thing that can really bring that down right now is a significant break in the labor market, which turns into recession, and then the Fed has to start cutting quickly. Labor market's been very resilient. Go back to yesterday's hot sheet and give that a listen, either here on the YouTube channel, or if you're in the car and you want to re-listen to some of these when you miss them, we're on Spotify, we're on Apple, to make it easier for you to get the hot sheet if you can't be here live. But we talked about the labor market and the scenarios that exist, or maybe the only scenarios that could exist to where we start to get a lowering in a rate. None of those scenarios are really good news for the economy, for your neighbors, for the people that you're serving in your community, because it means a lot of people would lose their jobs. So it just kind of is what it is. Mortgage Banker Association doesn't look like they're going to turn up being right by the end of the year. This is the market. Get used to it. It's going to be higher for longer, much higher for much longer. And that's going to reflect in the 30-year rates. On today's at Knowledge Brokers podcast, which is on a separate channel, at Knowledge Brokers podcast, at 2:00. I think 2:00. Bobby can correct me in the comments if I'm wrong. I think it'll go up at 2, if not earlier. We've got a podcast going up from our panel, a live podcast that we did at BAM Camp on Wednesday, and we dig into this quite a bit and what to do and some of the objections to handle to go ahead and make sure that you're getting listings and protecting yourself in this coming market. I make the case about going wide right now, talking to a lot of people. You don't want to go deep on just a few people. You want to go wide, help a lot of people, help as many people as you can, because there's going to be a lot of questions, going to be a lot of uncertainty. And in an environment when you're having lower transactions, you're just going to need more at-bats, more opportunity to help. And there's agents exiting. So it's your job to pick up the slack. It's an opportunity, yes, for your business to earn more income, but it's also your duty and obligation to serve the industry, serve the community, serve the market, where if there's just not the agent level, the agent population being, going down, and there's not the level of agent capable of serving in this type of environment, it's up to you. It's up to this community, everybody in BAM, everybody watching the hot sheet, to pick up that slack and make sure we fill in the gaps. Hopefully, we're going to fill in here on a 10-year that is going to at least go down a little bit. We don't want to be living in that over 4.5 world that we showed you on the chart. It appears that that's basically where we're heading. The one-day range has been 4.460 to 4.511. We're off of the 4.5 now, sitting at 4.475 on the 10-year bond. And again, just a recap on where rates were leaving the day yesterday, 7.47. Also, the Freddie Mac 30-year fixed weekly came out, and that was up just a tick from 7.18 the previous week to 7.19. Okay, we'll see where that goes next week, and where you should be next week if you're looking for something to get your end of the year, beginning of the year straightened out. Then you should be in LA next week at FubCon 2023. Immerse yourself in a community of high achievers, world-class trainers, top producing agents, leading industry voices. I've talked to a whole bunch of people that are heading over there. They're super excited based off of the fact that they just pour a whole bunch into this conference. 6 keynotes, 5 hand-on breakouts, 35 plus speakers, huge party. It's in LA. It's 3 days. It's absolutely an iconic event, and you get 30% off by using the code down below, BAM_VIP 30% off and 55% off your second ticket. Follow Up Boss is the CRM that I use with my team up in Connecticut, and this conference is going to be bonkers. I believe Eric, the broke agent, will be wandering around at least one of the days, so you could go, where's the broke agent? Like a Where's Waldo? He kind of looks like Waldo, doesn't he? Those of you that went to BAM camp met Eric in person. Did you mistake him for Waldo? I certainly do sometimes. All right. Thank you guys for joining me on the hot sheet. We do this each and every single day. BAM is the only media company in real estate even capable of pulling it off because we're practitioners. We want to pour into you guys, and we'll be back here on Monday to continue to do that. Thank you for taking the journey with us. If you have yet to subscribe to this channel, please do so. We'll see you back here on Monday morning. Have a great weekend. Remember, consumers call volume goes through the roof Friday, Saturday, and Sunday. Great opportunity over the next 72 hours. That's realtor.com. That's Zillow data, not mine. They've got more of this data than anybody else. So keep that in mind as you go through the next 72. Best of luck to you. And I will see you back here on Monday morning. Until then, toodaloo.